Hey, how's it going, everyone? Today is October 29th. It's Sunday evening, just before we start the new week. We had a little bit of an issue with the recording of today's normal Sunday call, so this is a bit of an unusual call, but we wanted to hop on and just do a quick one for y'all to offer the analysis that we talked about today on the dollar and the indices and run quickly through the economic calendar because we do have a lot of news this week. So hopefully we can help you all get prepared for the week ahead if you weren't able to attend this week's live call. And yep, so we're just going to jump in and go quickly through it. Carson will start with economic calendar, and then we'll get into our weekly analysis.
What's going on, guys? I am back. Sorry I missed out on the call today, but I know that there was a lot of insight there. Unfortunately, it was the recording got lost in the ether, so I do apologize about that. But you guys get a little shortened down version of that going into this week. So NFP week, NF protocol week, so NFP protocol week. So if you don't know what that is, on the first week of every month, we have non-farm payroll. That is the first Friday of every month. And the whole idea of the NFP protocol is to try to, whatever trades you want to get into this week, you want to get into those going into up and before noon on Wednesday. So Monday, Tuesday, and Wednesday AM session, you tend to get better probability of trades. And then following that, the probabilities kind of diminish, the resistance goes a little bit higher. You start to get in high resistance liquidity conditions. And I think the main point of focus too is once you get past that noonish on Wednesday, the market kind of starts to overall build into this big seek and destroy profile template. And that's not really the most ideal profile that you want to trade or conditions you want to trade. So with regards to this week, there is still news on Tuesday and Wednesday. Obviously, there's nothing on Monday, so keep that in mind going into tomorrow. But on Tuesday, we have 8:30 a.m. employment cost index, quarterly on quarterly, 9 a.m. S&P composite HPIs, yearly on yearly, 9:45 Chicago PMIs, and then at 10 a.m. consumer confidence. So you do kind of have a decently jam-packed day on Tuesday. And then on Wednesday, you have ADP non-farm employment change. That's actually a pretty volatile event also. So there'll be some good trading prior to 9:30 equities open. And then at 10 a.m., you have ISM manufacturing PMIs, JOLTS job openings. That's actually pretty volatile. I will say so myself. I actually really like trading JOLTS. I think it's the setups that I find in and around those news events are often very clean cut. And then other than that, after the fact, going into the PM session on Wednesday, that's where I would consider the market on my side of trading off limits. But at 2 o'clock, you have the funds rates, you have FOMC statements, and you have the press conference at 2:30. And then Thursday, you have unemployment claims at 8:30. And then Friday, we have 8:30 non-farm payrolls, average hourly earnings month on month, and then unemployment rate. And then about an hour and a half after that, you've got ISM services PMI. So biggest takeaways for me going into this week, preferably would like to see how the morning opens at 9:30 on Tuesday. Would like to see 30 minutes after that going into that consumer confidence. If there's something there, I would be willing to take it. And depending if it is, depending if it isn't, going into Wednesday, my main focus would be going into that 10 o'clock JOLTS job openings and ISM manufacturing PMIs. That would be where I would put my scope for at least most of the majority of the week if I was going to try to find a trade setup. But still, Tuesday and Wednesday definitely have volatility there. Just make sure that you know what could potentially unfold prior to the PM session going in on Wednesday, Thursday, and Friday. Other than that, I'll go ahead and get into the DXY. I can find the right button. There it is. Okay, dollar. So nothing really has changed here. I'm still aiming for buy side at 107,400. My main focus into this week actually is just two main points on the weekly. It's this midpoint or consequent encroachment of this weekly wick, right? This rejection block, right? I was talking about it last week, and I was wanting to see if we can close above it, or at least see how we behave going to it. We did get above it, but we did not close above it. So I think that that's something that could potentially unfold this week. And then I'm also just taking last week's candle, and I'm looking at the midpoint of that, the equilibrium of that. Noting that there was 2 BISIs down here, right? And you can see price fully filled that BISI last week. Strong reaction higher with up closure. I do not see this BISI getting filled or not filled because it's already filled, reclaimed. I don't want price to come back down there. But I'm also going to note the consequent encouragement of this week also, because if price does want to get a little bit deeper on a retracement, it could come revisit this weekly BISI if it wanted to, and maybe even the consequent encouragement of this rejection block on the weekly. Aside from the weekly, that's about really what I'm looking at. 107,400 as liquidity. This October 2nd weekly bearish rejection block consequent encouragement, seeing if we can find ways to get some closure above that and use it as support. And then the consequent encouragement of last week's rejection block wick. And then obviously this BISI. Those are the things that I would kind of view going into this week. Going on a daily, look at a daily, same thing, right? So you can see on Thursday and Friday, we were trading in and around that weekly rejection block of the consequent encouragement. But notice how we did not close it, right? We want to see if price is willing to close above it and use it as support and run into that buy side. Note that on by the end of the day on Thursday, we did create this BISI right here. You can see price come in and almost fully fill it and close all the way back above it. So if you're bullish, obviously that's a good sign. Price is willing to, come in and then close outside of it. But still noting this BISI, like I said, if we do want to get a little bit of a retreat, a deeper retracement, we could come into this level. We really wanted to come into this order block right here, right? This down closure Monday, October 23rd candle would be an order block, and then you might see a push higher and there to something like this, right? If it really wanted to kind of hang around, you'd want to see something kind of like this, right? That's kind of on a deeper retracement side of things. And if we kind of stay heavy-handed to the upside, I would prefer price to just kind of either fill all of this, right? It could fill all of this and then go higher. And like I said, use this. Really, that's the main key, is to use that consequent encouragement as support and go higher, right? Something like that could happen. And then if we are going to kind of stay heavy-handed, I would like to just see price merely return to the top half of this BISI. Same thing, use that as support and go higher, right? So that's kind of my eyesight for this week. But know that once we get past that AM session on Wednesday, price is going to be very keen to potentially take out daily highs, daily lows, go into that seek and destroy profile template. So just beware on that. Other than that, that's about it for me. Very short, very simple. Same targets that we've been looking for over the past 2 or 3 weeks. Just curious to see what arrays might form leading up until, after Monday's closure and even after potentially Tuesday's closure. So keep those things in mind, and feel free to reach out if you guys need me or anything else. Otherwise, I'm good.
All right. Quickly on ES and the NASDAQ. So past few weeks, we've been continuing to see the bearish order flow overall, reaching down into the sell side targets we've been talking about. You see in this past week, we reached both under the May 22 weekly candle low, which we were talking about, and then these relative equal lows down here from the beginning of May, tapping into that. And then what I had marked out here was this weekly BISI between this candle's high and this candle's low. That's this gray box right here. And then I'm marking the low to this candle's low right here as the remaining portion of this weekly BISI, which had yet to be redelivered. So here, at the beginning of May, the top half of the BISI was redelivered into the consequent encouragement right there, but the remainder of it was not. So as we continue to deliver lower, just looking for that that discount side of this BISI to be redelivered. So the next targets there would be the low end of this BISI right here, 4104.25, and then reaching below that, we could see price return into this weekly volume imbalance here. And then if things get very heavy-handed with the news this week, or just looking forward to future weeks as we continue to deliver lower, assuming that the dollar does continue to run higher as well. We do have these relative equal lows down here in the 3900 area at 39.05, and this low is 39.16. So keeping an eye on those over the longer time frame. We do have a couple cities above on the weekly chart, or this isn't one quite yet because we just started this new week, but we do have a city up here as well. Though I would prefer to see this as a breakaway gap, and I'll discuss why. So just marking that out as the weekly city. As I go down into a daily chart, you'll see that that is resting inside of this bearish breaker, right? High, low, higher high, trading through the low right here, and then utilizing that on the daily chart, we traded up into a little city right here on the daily, and then dropping below. So I prefer at this point for price to remain below this candle's high from Tuesday of this past week. Yes, we could return up into some of these inefficiencies now that we've run out these relative equal lows, but overall, I prefer to see price remain pretty heavy-handed and just start working down into these discount arrays and down toward this area, assuming that the dollar does continue to move higher. If we do trade back above and close above the high of this city right here, then we could potentially see a deeper run back into this breaker, maybe back above this high to run out buy stops, and we do have an inefficiency remaining up here as well. But like I said, ideally, we do remain pretty heavy-handed, just trade inside some of these lower inefficiencies right here if we do make our way back above Friday's high, and then potentially form a higher week up there to drop down into some of those discount areas. That's it for ES. I'll go quickly into NASDAQ. So here on NASDAQ, first starting on a monthly chart, you can see that we've dropped down into this monthly BISI right here between this candle's high and this candle's low, marking out the midpoint right there. Last week, we fell just shy of the consequent encroachment at 14,116 and a quarter. So keep your eye on that going into this week as a potential level to trade to. Then dropping down into a weekly chart, we've now redelivered all of these inefficiencies in here. So we have a volume imbalance, a BISI between this candle's high and this candle's low, and another volume imbalance here. I've just included them all inside one inefficiency, and you can see that we've redelivered the entire sell side of that, and yet falling just short of the monthly BISI consequent encroachment. And as we continue to look into this next week, just still continuing to look for sell side targets, right? So now we'd be looking for consequent encroachment of this wick right here, and this monthly, weekly BISI right here between this candle's high and this candle's low. Okay, dropping down into a daily chart, you can see again we made a Tuesday higher week this past week, trading up into this daily city and nearly completing a immediate rebalance on the weekly chart. It did fall just shy of that, leaving a very small city on the weekly, which you can see right there, a small separation there. But it's very minor, and with the displacement away from that, I'd expect to see that as a breakaway gap as well. And here again, you could see a breaker on NASDAQ, right? So high, low, higher high, trading through it right there. And so you could see this area as a potential area to retrace and then reject off of if we do return back up into this range. On Thursday, we delivered just down into this daily liquidity void. You can see there's been no trading between this candle's high and this candle's low, a complete gap in there with no overlapping wicks or bodies at all. So just marking that out as another area to trade deeper into. Look at the midpoint of that and then watching the low as well. You can clear these up. And then below that, we'll have sell side under this daily low right here. And this is that weekly BISI on the weekly chart right there. Okay. And then again, if things do get very heavy-handed, we'll just be looking for the monthly BISI low down here at 13,599. All right. Just in terms of the buy side, wouldn't really like to see price close back above the high end of this city right here. And if we do wick above that in any sense, I'd like to see price not really extend beyond the high of this weekly inefficiency that we saw back here, that volume balance and the BISI and the volume balance here. So now using these ideas as inversion in a sense, if you look onto a daily chart, we've got some efficiencies in here that you could now take across and utilize this inversion. So keep an eye on, I'll mark up the midpoint. We've got the low, the midpoint here, and the high. The midpoint aligning nicely with that Monday's low swing point from last week. So that's a pretty powerful confluence when you have an old low in combination with an inefficiency. Right? So we have the volume balance and the city right here. So that's a potential area we could see a retracement into if we do move back above Friday's high and then working lower into these discount areas. That is it for me on the indices. Carson, any thoughts to touch on here? Otherwise, all good.
Nope, I'm good there. Same thing applies. Still look for the same targets. Nothing's changed. Other than that, I'm good on that with the charts. I will give you guys something going into this week. You know, the Rocky cutscene lasts 2 minutes, but it can last 5 years in real life. And there's no background music. There's nobody, no audience cheering you on. And you don't actually know if you're actually going to beat Apollo Creed. And I think that that's what scares a lot of us in this big world of trading because of the uncertainty that comes with it, right? You don't know if you're going to actually become the trader that you really aspire to be. And, you know, I'm going to take it to another natural extreme and say that's what makes it worth it. The uncertainty is what's probably the most fearful, but it's also probably what's the most filling. Because if you knew you were going to make it, you probably wouldn't value it in the manner you would if you didn't know. And so take that going into this week, tomorrow, weeks from now, months from now, wherever you are in your journey, you don't know, right? And I think that, you know, a lot of people use that as some of their biggest weight. And I let that free form you into whatever you can, you know, form it to be. You don't know, right? You don't know. And that's going to make it ever so more meaningful when it does happen, right? If it does happen, I can't do it for you. Henry can't do it for you. If it were me and I could do it for you, I would do it, but I can't. So you have to realize that it is on you, and all that uncertainty is on you. And it's not a 2-minute cutscene with an audience cheering and background music. It's 5 years with no audience and no background music, and you don't know if you'll do it. But you have people in your corner, got resources to use, and use them wisely. So take that going into this week. Hope you guys trade safe. Feel free to reach out to us, whether it's on the website, DM, whatever you guys want. Continue to give us feedback, things that you guys might like, want, need, and we're all ears. Thank you guys. Appreciate you, and that's it for me.
All right. And thanks everyone. Thanks to those who came to the live call this morning. And if you were unable to attend, hopefully you've gotten some value out of tonight's short and sweet call. And be safe, be responsible in the markets this week. And we will talk to you on Wednesday with the regular midweek market review. Take care, y'all.
Peace.